morning, everybody. This is Dennis Weber, one of the active trend traders. Welcome to the art and science of active trend trading and the update for what is today. Today is August 5th, 2018, where we just got started into the month. We'll see what the market has to bring to us. I want to remind everybody that all the materials we do present are for training purposes only. Traders should always pay for trade any new method prior to the risk of their own personal capital. Just got a model of the active trend trading service is basically we want to continue to always help clarify, simplify, so that folks can multiply their holdings and multiply their prosperity. That's what I'm after, and that's what keeps me going, is knowing that we've got successful members out there who are trading really, really well. So let's get going on what this is all about. Just to show you that, yep, it's really me. It's not a robot. So the art and science of active trend trading update. Basically, what we're looking at is kind of a weekly update video to accompany the newsletter, or in reality, it replaces the newsletter, but it'll be posted to the website. In this session, we want to go over some technical market technicals, potential bonus setups, other market driving events. Like last week was the Fed. This week, primarily, we're just working into the middle of earnings season, and that's what's driving us. And then if we have any tech tips, we want to basically also pass those on. I want to keep this to about 10 to 15 minutes, so make it respectful of your time. So for today, I want to go over earnings real quick, earnings setups, bonus setups, seasonality, gold, and I'm going to take a look at the Russell today, because Russell is the index that typically gets the biggest seasonal run in the October time frame. So we'll take a look at that. And then finally, the tech tip is you can't kiss all the babies, and we'll explain what that means here shortly. So, matter of fact, on the next slide. So let's take a real quick look. Let's look at some charts and see what we're looking at. So we'll start with just a real quick overview of the markets themselves. Here's the SPY. As we see on a weekly basis, on the left-hand side, we've bounced off the, this is the 50-week moving average, or 40-week moving average, which corresponds to approximately the 200-day moving average, and that would have happened down in this area here. As you can see, I do have my my cursor linked, where when I have my cursor on the right-hand screen, you can see its presence over here on the left-hand screen. So it gives you a flavor for. And the reason I set it up like that is very simple. One, when I see an entry signal or I see a setup on a daily chart, I want to be able to really quickly go out and locate on the weekly chart where is that specific area. As we see here is a nice little bottoming move that happened in the July time frame on the SPY, and bouncing back up through the 50. What was it doing on the weekly chart? Well, you see over here on the weekly chart, it was pulling up and bouncing through the 8-week moving average. And it's just a little bit of benefit. And okay, SPY, basically we get a TSI tick up off of, close to support on the 0 line. It's moving right back up into the old resistance level. And until we get past this, about 285, we're not going anywhere. And just slightly above that, you have to switch over here to the weekly chart, because you've got another, level of resistance, about the 286.70 level. And so price action has to actually just break through that. And then that let's see, what are these highs right here? These highs right here are exactly 286.63. Then that level then becomes a level of support to support the index moving higher. So SPY pushing higher with earnings. The Fed did what it was expected to do, didn't raise rates, and so everything was good with that. The Qs representing the NASDAQ. Similar type situation. Nice bounce off of the 50-day moving average here. And then we continue to proceed up. Will we get back up there to the past all-time highs at about 183? If I were looking to trade either, I like the NASDAQ better than I like the strength of the S&P. And so just look to trade somewhere off of the 820 combo, which is right in that area right there. I'm going to zoom in just a little bit more, get you some clarity here. There we go, right there, 178-ish. IWM had been kind of leading for a brief period of time since the end of June, when it bounced off the 50-day moving average here, ran up. Where did it run to? Right up, whacked its head right on the 170 level, and then it's been kind of just consolidating, pulling back, pulling back, pulling back. And we've got back all the way to the 50-day moving average. And, one of the things that is just a real challenge for traders is we have these support levels that are identified by past price action, which is down here at the 164 area. And in addition to that, the longer term or stronger moving averages. Sometimes we just have a real challenge convincing ourselves that that's where we need to be jumping onto a trade, because why is that such a great place to jump on a trade? Well, because it's close to where it will stop out at. So in reality, the risk reward is actually higher when it is sitting at a level as defined by past support and or the moving averages. So TSI on IWM on the weekly still looks like it wants to fall a little bit more. My son and I have been working on, Brandon, have been working on doing a lot of back testing and trying to solve a problem that we had with the early morning alerts, which was the whipsaw issue. And we've got that just about resolved. I'm really, pleased with that, or at least reduced it a lot for early warning alerts. And then when we come out with, instead of early warning alerts into 2019, we'll be moving over to what we're calling the market action points, which is, I think, going to be a much stronger service than early warning alerts. And so we're excited about getting that launched. New information will be out about that towards the end of August. So let's see. What we found was when you get this TSI tick down on the and rollover on the weekly charts, as long as it's pointing in a down position, you have to be really, 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 really careful on starting a new long position until the TSI shows, and the TSI is a secondary indicator, but it tends to bounce off of certain levels. The zero line is a good level. Actually, this old high here would be a potential level where it could bounce off of and move higher, or anything down below the zero line. As long as this price action is, or as long as the TSI, this is showing what's happening with internal momentum, as long as it's headed down, longer term, there will be an overhead cap going on here on IWM, and we would expect some additional pullback. And so that's what we're looking at. And so as I look at this chart of IWM, could this turn around right where it's at? Absolutely. At the same time, we could see a pullback down into the 162.70 level and even the 160 level. 160 would be, to me, a stronger level of support to work off of. And because by that time, the 40-week moving average, which equates to approximately the 200, would be up in about the 160 level. So it would be up in the area there. And as you can see, past support, past breakout levels. And again, here is, and then as I was saying earlier, here's also that level of support, about 162.60. So that's what I'm looking at with IWM, guys. Moving over quickly to a couple of stocks that are looking interesting for earnings. BABA, or not, well, an example of one that's looking not interested from a level of earnings. BABA is getting impacted like a lot of the other Chinese stock. And as we see, what makes this not a candidate for a pre-earnings run? Well, pre-earnings are finally set for 8:23 before market opens, BMO. We are sitting at a level of support. However, I haven't gotten any kind of a reversal signal, be it a a bullish reversal candle. And look at your daily TSI. Daily TSI is still pointing where? Towards the downside. And so it appears as if it may drop some more. Now, between now and then, if we get down into the somewhere within 175 and 170, and our TSI gets down here towards the negative 40 level, we may say, hey, we may get a really quick 5 or 6 day run on BABA. But until we get those things setting up for us, I will stay away from BABA with regarding a pre-earnings run. And then the other thing that shows up over here on the weekly chart, we just broke back down through the 40-week moving average, which equates to approximately the 200-day moving average, as we see 200-day moving average there, and it broke back down here. Now, one of the reasons why there's a slight difference between the 200-day simple moving average on the daily chart and the, I think it's a 40-week EMA on the weekly chart, and that's part of the reason why there's a slight difference there. But it again, when you're using a moving average, your precision is that you're just attempting to get into the ballpark. It's going to put you in the ballpark of the zone where we'd anticipate things happening. So that's it for BABA. The other one to keep my eye on is NVDA. Now, NVDA looks like it could be a little more promising. Now, it has earnings coming up on the 16th, which is a week after this one. So it's almost 2 weeks away. And the 16th is on a Thursday, and it's after market close, AMC. And so we'll be paying attention to NVDA because it looks like it's starting to turn around. TSI has ticked up on the daily. We were in a slight uptrend. So what I would be doing in a situation like this is it come down here, bounce off the 100-day moving average, and it is rebounding up. Now, the only place I would be, looking at potentially taking a position in this is if we get back into the 820-50 combo about the 249 level. That might provide an opportunity to move to the upside. I would throw on that on top of the analysis there is what's going on with the daily / the intraday chart. Now, the intraday chart looks like 151 or 250, 251 is going to be a place where it will bounce. And if that's it, and it takes out the 153 and blows out through the rest of the 256 level, then we can anticipate NVDA running all the way up to about anywhere from 260 to 265. So that would be worth the ride. Let me change this over real quick to the hourly chart. And as you can see, it did the congested run down here, then finally ticked up on the TSI on the 1 hour intraday chart, retest a little bit, that's 242 with last week's volatility, and then has run $10. And so NVDA, nice little, I would prefer, and I'll just tell myself, hey, this is what I'm waiting for. I would prefer to see my TSI intraday down like here to take my order on. However, what's going on the weekly? TSI is ticking up from approximately the 0 line. What's going on the daily? TSI is ticking up slightly from the 0 line. And so what we may get as an alternative is pay attention to this yellow line here, this gold line. The gold line reflects the 50-period moving average on a 1 hour chart. That is approximately the 8-day. And so if we get price action that pulls back into the 50, and the 50, let's say the 50 continues to run up this way, about let's say 250 is where they could intersect, and we get a rebound from there. That would be an excellent place to get into a position. That would be either buying a little bit of the stock and or doing a option that expires the week of earnings, and then letting the implied volatility increase. Plus, if we get movement in our direction, that would be the way that I would look at trading now. what is the objective move-wise. With all these pre-earnings moves, my objective is simple. It's somewhere between 5 to 10 to 15%. If I'm 2 weeks away from earnings, such as we are in this particular case, 5%, if I picked up at 250, a 5% move would be, oops, 1.05, up to 262, 50, which would be up there in this zone up here, which is where we anticipate it going anyway. And if it didn't get that high, close it prior to earnings with a 5% gain and go. I'm happy. So okay, that takes care of the earnings trades. Let's say the next, just real quick, what we're looking at now is bonus setups. I will come back to that. And let's talk about bonus setups right now. Bonus setups, and then we'll get into seasonality and the can't kiss all the babies. Bonus setups. The only one that I'm looking at right now for a potential bonus setup that I would share with everybody is Grub. Grub had great earnings, blasted out, broke out above the 120. 120 is a level of support. And now it's just consolidating, it's digesting these gains within this large green candle. So any type of a move back into this little box that I've drawn on here is from about the 120 up to the 8-period moving average. And notice how it kind of engulfs. Here's the 20, here's the 8. We get a pullback into some of those areas. I would put an alert in there. I would either put an alert, or I would say, if it pulls back to 121, trigger a buy order to buy at 121.50, and with a stop basically just below the 117.35. Of course, I would work out and find out what percentages that would work out to be, and size the position appropriately. That way I'm ready just in case that Grub dips down into this box, finds legs and finds the support, and then runs up from there. I'll give you an ballpark idea. If we were into the trade at about, let's say 121.50-ish, there we go. And our stop was down to 20. We're going to be looking at about a little bit over a 3, almost 4% stop loss, which is well within the guidelines of the system. So that's the bonus trade. I'll leave with you guys. The next item I wanted to just real chat with really quick is you can't kiss all the babies, which is in fact, and I will get back to the seasonality and gold. You can't kiss all the babies. And what I mean by that is that there's thousands and thousands of stocks and or ETFs out there for a person to be paying attention. One of the things that I have noticed, and this is what I presented in the Bay Area Moneymaker meeting yesterday, is that I do multiple sorts on the IBD premium list every week. One of the sorts I do is basically the fundamental sort. I take the IBD 50 for that week, and I sort it according to its fundamental strengths. And these were all characteristics developed by IBD. And the stocks that turn out on top of this are the ones I want to pay attention to. And for this week, our fundamental winners were LGND, Venom, Grub, Nano, ABMD, Paycom, and Trex. The month before, and this is what brought this to my attention, the month before, LGN, Venom, Grub, and ABMD showed up on the list of for the fundamental winners. And what came, glaringly clear is that once I had that list developed, that could be my trade list for the rest of the, going forward until they're replaced. And what would have happened if, and that's one of the things I took a look at, what would have happened if what would happen if, okay, grub would have been, on my list. Well, this little purple, I'll highlight this too, grub, venom. So this little purple line here is when the last Bay Area Moneymaker was when I posted this list. And what it was this, did it turn out that, did we get a buy opportunity with grub in that between that time frame? And the answer to that question is yes. We had it dancing up above the 50-day moving average and the 8 and the 20. Things were starting to turn up on the TSI, on the market forecast, and so bam, we could have gotten into a trade. By the time we hit earnings, how much would that trade have been up? That trade would have been up now about 1.8%. However, prior to earnings, it ran up about 6.8%. So I'm not going to say you would have stuck with the trade through earnings, but you could have been in for a nice little 5 to 6%, 7% gain on it. If you did, let's say you sold off part of your position when just prior to earnings, well, earnings would have paid you off very nicely, and that would have been a nice 30% move. But that's one way to trade earnings. The other one that we had up there was LGND, a couple of other ones. And again, the purple dot, there's my purple line, and that's when it came on the list a week ago. And what did it do? It drew and it faded across to the 8-day moving average, gave us a nice little trigger there, short-term trigger, and then by the time it reached its high, it had run up about 10%. So what I'm saying is that when we're looking at, is that when these lists spit out, pay attention to them, because the top list can provide you with, just watch those stocks. And that way it keeps you from driving yourself nuts trying to capture every stock. And where did that show up on the, I'll show you where it shows up. On the Active Trend Trader trade list, you go here to free videos and articles, and that's where I post basically the items that I do provide for free active members. Like here's some making money trading stocks, options, and ETFs for Friday, and then the art and science of active trend trading. It shows up here. You just click on that. Takes you away to this page, and you have the video, a copy of the video that you're watching right now. But down below here, what we have is the running list, or the different IBD lists. I have the running list, I have the sorted list, this is the one for the fundamentals, and then I have the composite list where I combine all 13 IBD premium lists and then sort that by the number of list an individual stock is showed up on. And for this particular week, as you can see, Facebook showed up on 9 lists as it was getting ready to go into earnings. And then, of course, now it shows up on no list. Sort. But anyway, and just pay attention to these repeating stocks. This is a great place to hone in really quickly on potential stocks. And it's right there for free on the Active Trend Trading website. And then last but not least, I want to leave you with a couple of couple of items, and it has to do with seasonality of gold. Gold, I'm tired of chasing the seasonality of gold. Gold basically tends to get a bid towards the end of July, into August. Normally, over the past few years, it's been happening earlier than that. This year, not so much. One of our members who joined us on the Friday showed this surge in around the August timeframe is tied very heavily to the Indian wedding season. The Indian wedding season starts, from what this gentleman was telling us, is on August 11th. So we'll see if gold catches a bid going into the end of the week and into August 11th. My objective, I am not touching gold until I get a reversal signal. I'm not touching golden sign. The other, I just want to start getting this and moving this onto folks' radar is what does Russell seem to do on a seasonal basis. And this is the run that I've been talking about, is the run that happens from about sometime in October through the end of the year. Russell tends to go on a larger run than the other stocks, the other stock indexes. So we want to position ourselves where, or at least be expected, Russell can get a small run into about mid-September. September is typically a poor month for all indexes, with basically just a kind of a sideways move or even a down move. But what it does is it gives you a golden setup for the end of the year run. And again, Russell, from a seasonal, it has a seasonal tendency to put on a heavy duty run going into the end of the month. So we want to be paying attention to that. And I'll pop over here. The last thing that I'll leave everybody with is, let's look at my buddy GLD. And as you can see, GLD, we are at a level of support at about $114. Is gold going to reverse here? One of the things that's missing is TSI weekly chart. It is extended, further than it's been in a long time. This golden dotted line down here is one of the past lows on the TSI, and we have reached that. We have no reversal candle, but a weekly reversal will probably turn the TSI around, and that'll be our first clue to perhaps the August, September, October run in gold will be on its way. Now, what's typically the move? The move has typically been over a 1, 2, 3, 4, 5, 6, 7, 8, 9 to 10 weeks and run about 10%. And so if we bounce from here and we ran 10%, 10% would put us right back to about, let's say 126-ish. And so from 114 to 126. And then I'll be sharing with the premium members, a couple of different ways to potentially trade that are fairly low risk, but with the potential of a strong. And at any time you want to find out how to become a premium active trend trader and get the actual, timely text and email alerts on what we're trading, you can always say, shoot me an email, and if you listen to this video, I'll show you how to do it at a discount. So until later, have a great rest of your weekend, and also may your August be very productive and prosperous. And so until later, God bless, aloha.